welcome to episode 104 of Mo Money, the investing economics show for millennials by a millennial, where our goal is to educate, entertain, and increase the financial literacy of a whole new generation. This is the first episode of 2020. It's been a while. I've been, writer's block and confused on what the fuck's going on with everything and everywhere, especially the economy. So allow me to reintroduce myself. I'm the brains, the beauty, the creator, the alpha, the omega, the greatest host of the greatest show, Mo Money. Now, let's get to the money. We all know what's going on in the world without me having to mention it by name. It's all over the news, it's all over social media. Our lives have become like we are all bubble boys and girls. But what you might not know about what is going on in the financial markets because you weren't paying attention before, so why the fuck would you care now? Fair. So in this episode of Mo Money, we are going to do a little Mo Money market update of the major stories of the financial markets in the past few weeks. The biggest news has been the massive volatility in the stock market. One day the market is down 1,000 points, the next it's up 900, then down 500 more points, then up 1,200 points. But I'm here to tell you that the points mean absolutely nothing. It's like, whose line is it anyway? The points don't mean anything. The percentages are what's important, and here are the percentages. From the start of the year until February 12th, the Dow Jones was up 3.55%. A very good start to the year and had just hit an all-time high, which of course Trump bragged about. Things were looking good, but a week later the decline began, and by the end of February the market was down 14%. And then 3 weeks later, on March 23rd, the stock market had declined a total of 37% from the high, making it one of the fastest and most violent bear markets of all time. But in the past week since March 23rd, the market is up 27%, which means the market is down only 6% from the previous high set in February. It's April 8th when I'm recording this. By the time you watch this, who knows where the market will be. Maybe it's going to be down another 30%, or it could be at a new all-time high. It's a wild time. There could be multiple reasons for the sharp increase. One being that the market was oversold and people saw some stocks as value. There's forced buyers all the time due to 401ks and pensions. People who shorted the market might have been forced to cover their shorts. It could be due to the passing of the CARES Act on Friday, March 27th, or it could be due to the fact that nobody knows what's going on. Some people are saying that's going to be worse than the Great Depression. Some people will say it'll be bad, but not that bad. Some say the market has seen the worst of the worst already. And if you ask my opinion, yes. But let's get back to the CARES Act, which is a very clever acronym for the Coronavirus Aid and Relief and Economic Security Act. CARES. You get it? It's a $2 trillion stimulus or relief package or bailout, whichever euphemism you care to use. There are two main parts of the CARES Act. There's the part for individuals, which includes the $300 billion in direct cash payments of $1,200 to individuals making under $75,000. There's also the suspension of any student loans held by the government and an expansion of unemployment benefits, which will become extremely important very, very soon. The reason being, 2 weeks ago, 3 million people became newly unemployed, and last week, 6 million people became newly unemployed. And that's a number that is most likely going to continue going up in the coming weeks. Which brings us to the second most important part of the CARES Act, which is the $350 billion set aside for small businesses, which I don't need to tell you how important small businesses are. Whether you live in a big city or you live in a beautiful small town, you know and interact with small businesses, and you know right now that most of them are in critical condition due to forced shutdowns. The Small Business Administration, the SBA, is in charge of overseeing the allocation of the money, and it is not really going well. The problem is there's no conduit, no streets, no pipes, nothing in place to get the small businesses the money that they need. It's a shit show. The SBA's computer crashed when banks tried to process applications. Banks are refusing to lend to small businesses who don't have accounts with them already. Banks are refusing to lend to people who already have accounts with them. Banks are worried about their capital levels. Banks being informed of the rules by the SBA the night before this program began. But with that being such a disaster, you have to believe when they finally start sending out or depositing the individual stimulus checks that the process is not going to be any smoother. Right now, the IRS said if you gave them your direct deposit information with your taxes, you should get the money no problem. But those who didn't file taxes will have to submit their information online to get their direct deposit. And those who have not yet filed their taxes for 2019 better hurry up and do so now. And those who do not have a bank account will have to wait for the checks to be sent in the mail, which could take weeks or even months. And when you're hungry, or your kids are hungry, or you're facing eviction, you don't have that kind of time. People are hurting. This is a very serious time. Obviously, fighting the disease, taking care of those who are sick, and ensuring public health is priority number one. But not far behind is taking care of those who are newly unemployed or short financially. And we need to make sure that we get the money into their hands as soon and as sufficiently as possible. The CARES Act also allocates $520 billion to local and state governments as well as public and health services. But it also allocates $500 billion to large businesses. And I guarantee the fucking corruption and bullshit that money is going to cause is going to make my blood boil and lead to many Twitter rants. And that's obviously an issue for down the road. There isn't a bottom line for this episode because I didn't really teach you anything. It was just kind of a recap of current events. So the bottom line is this. This is the end of the episode. Thank you for watching. You can find new and classic episodes of Mo Money right here on YouTube. For now, don't forget to like, comment, subscribe, share. Follow me on Twitter. Follow me on Instagram. Like me on Facebook.
Mo Money signing out.